What's going on to all my concept thinkers? I am Mr. J. Howard, and today another video from Concept Business Success. Informative extraordinaire, of course. Today we're going to talk about what are hard money loans and are they good for first-time investors? I can't tell you guys how many times I get asked this question, whether it's via email, in my inbox, text message. Investors want to know, what are hard money loans? Hard money just sometimes doesn't ring well, so people might get a little nervous about them. Investors want to know, is this something good for them to jump into or take advantage of? Does it really offer the leverage that everyone talks about? And after all, with such high rates being advertised with some of these hard money loans, they want to make sure it's all worth it for them. So before I dive in, I want to be clear, not every deal that I do is with a hard money loan. Some of my deals I fund with private investor money or maybe some capital that I've saved along the way. But for the most part, to leverage my deals, to do multiple deals at a time, and plus I have such a good hard money lender, we do deals through hard money lenders. I know it was a lot to consume, but just to make sure you're aware, I do deals with hard money lenders. Here's why. So before I go any further, I want to make sure I don't forget. If you enjoy the content brought to you in this video, please make sure you like, subscribe, share, comment. Let us know if Mr. J. Howard and Concept Business Success can bring you any more value. We want to make sure we're doing it. So make sure you let us know. So let's dive right in. What are hard money loans? So hard money loans are simply short-term loans that allow investors to use leverage to get through their project, usually in a faster time frame. Some loans give you capital up front. Most loans give you access to capital on what's called a draw schedule, and we'll go more into that in just a few seconds. Most of these loans, again, being short term, are mostly somewhere between 3 and 6 months. And they usually have higher interest rates compared to, let's say, maybe your traditional bank who are giving mortgages. And there's a lot of different reasons for that. And it's true. Some traditional banks shy away from some of the deals that we do. Maybe we are a little bit more open-minded than some of their underwriters. And so what happens is they shy away because maybe we don't quite meet the required credit score. Maybe they don't feel that we have the required leverage. Maybe it doesn't fit their home type requirements. Or maybe they just don't like the amount of experience that you have. So a lot of times they can oppose some of the deals that you may bring them, as opposed to a hard money lender who looks at different requirements. They encourage new flippers, so maybe experience isn't the most important factor. Or maybe the specific hard money lender cares more about your experience and less about your credit scores. It's all going to depend on the type of hard money lender that you're dealing with. And one more key comparison is typically a traditional bank can be anywhere between 30 and 60 days to close on a property. In comparison to a hard money lender is trying to close in just a couple short weeks or maybe even up to a month. So let's talk about loan approval and how that works. So hard money lenders usually lend based on what's called the LTV, and that's loan to value. This means that they look at the value of the property and they may lend, let's say, 85% of what the deal is worth. The home value and the purchase of rehabbing, usually. That's different deals that can be designed a little different. That's going to be according to how your lender wants to do it. But for this example, we're going to say that 85% has to cover the purchase of the home and the rehab cost. So ultimately what that means is the amount of money that they're lending you, you want to be able to get both of those things. Anything outside of that will be out of pocket. Now, so there's no true elephant in the room. We know that normally their rates are a little bit higher. They're mostly dancing around 10%, but that's on an annualized basis. Therefore, it's not too much pain for you because hopefully your plan is to get in and get out of that deal. Simply put, you want to find a good lender that is eager for you to succeed as well. Understanding the banks have to make money, but you want to make sure that you're finding a good lending partner that wants you to make money as well. And again, just adding, so banks have to make money. And so a lot of times they make their money off of, let's say, the commissions for underwriting the loan, or maybe the points. They even sometimes have some administrative fees in for closing, etc. So you just want to make sure when you're looking around for lenders, that you ask them some of the costs up front. What are some of the percentages that you're going to be charged? Because again, all of that will factor into if you're only being approved for that 85% loan to value. Sometimes it's 90, sometimes it's less. Of course, the pandemic changed a lot of this, but you want to make sure you're aware of what you have to bring up front to close. Now, let's talk about how the loan works. Most, if not all of the deals that I've done have been on what's called a draw schedule. And a draw is simply, let's say the bank approves you for $100,000 in rehab costs. All right. Out of that rehab cost, what the bank wants to do is they want to reimburse you for the work that you're doing for that property. So let's say that your first portion of that deal on your schedule is demo and maybe framing. And let's say that the total of that is $10,000. So what the bank wants to see in order for them to reimburse you for that draw is that $10,000 worth of work. Now, usually what they do is send out an inspector after you send them or you request a draw, which means that you're telling them that this work is completed. And they send out an inspector who's going to take photos and give their opinion on the work that it was completed. And if they say that that work was 100% completed, then the bank is going to wire you that $10,000. So out of your $100,000 loan balance that's probably sitting in a separate account with that lender, you now have $90,000 left for that project. And typically, another question you want to ask your lender is if they charge for inspectors to come out to the property, what that charge is. And I always like to ask, what is the timeline for your draw deposit? All right, so you want to make sure that they are getting inspectors there within a timely manner, and of course, they're getting you your draw money back to your bank account so you can continue to move forward with that project within a timely manner as well. So here's a rule of thumb that I've learned while I've been doing some flips and some new construction deals, etc. Another thing is you do want to make sure that you have some capital on the side. All right, I know there's a bunch of gurus on YouTube and even a lot of the people that I learned some things from who say that you can get into flipping with little to no money. And you can have partners who may have a little bit more liquid or maybe a couple credit cards with several thousand on them, whatever that you can use to try to help get through the project. I have a rule of thumb that I use for each project. I try to make sure that I have somewhere around 20 to 25K liquid to get through that draw schedule. Why? Not because nothing bad with my lenders, but shit happens. All right. And you want to make sure that if stuff happens, you're not stuck. All right, in between your draws. And not only that, there are going to be times in this business, I'm sure you all watch HGTV, right? And you hear from some of the other flipping experts and all the famous gurus, stuff pops up, right? And you want to make sure you have a little bit of liquid for things that maybe weren't so much on your budget, but you need cash to get through because it's stopping you from doing something that's on your draw schedule. So you do want to make sure you have some liquid available. Now, I also understand that sometimes first-time flippers don't have $20,000 liquid to be able to get something done. So I would say start closer, somewhere in between 10 and 15 grand. Make sure that you attempt to have some, maybe a Lowe's credit card or maybe some other credit system set up from lumber companies, etc. And that'll give you some leverage throughout your deal. And I don't want to forget one other important question that you want to ask your lender before signing with them. Make sure that they don't have a limit on the draws. I do know some lenders only allow you to break up about 8 draws or maybe 4 or 5. And I like the flexibility to do my draws kind of at the pace of the project, especially around this season when it's holiday time and sometimes you have to go a little out of order, but you're still going forward. All right, so now let's talk about how this loan works. So what's going to happen is, first and foremost, you're going to do a ton of research on hard money lenders, and you're going to want to make sure that you're finding not only a legit company, but a company who has done several deals. I personally have a lender that I use. I'm going to ask them permission before I say their name. I'm sure they wouldn't mind, but I learned of them through the local CREA group that I'm in, and I've done several deals with them. There's several other companies that are within my area or my farm that have done a lot of marketing and advertising. I've done deals with probably about 4 or 5 different lenders at this point. But for the most part, I'll say 80% of the deals that I've done have been with one specific lender. So here's how it works. Once you find a couple lenders that you want to compare with, and I don't think anyone would have any problems with that, comparing rates, making sure that you're partnering with somebody who not only wants to partner with you, but again, wants to see success on your end too. You're going to go ahead and start looking for properties, and you can find properties all over, and we'll do another video to talk about finding properties. Once you find the properties, you're going to want to do your research and pull your own comps. Now, keep in mind that the bank is going to do this as well. And when I say bank, I'm talking about lender in this hard money lender video, of course. Some of the lenders want to see your experience, so be prepared to let them know some of the experience that you've had in this market, as far as understanding the properties, or how you know the comps, or even some deals that you've been involved in, whether it was through another partnership or whatever. Now, again, some lenders do require a pretty decent credit score, which is going to dance right around 630, I think is pretty much average. I've seen some lenders go lower. I've seen a lot of lenders probably put that on their less concerned list, and they're more concerned with, again, your experience, how many deals you've done, and even some lenders care mostly about the profit margin. And so again, they may go ahead and dance you through, or walk you through rather, submitting that bank, submitting that deal to the attorney, and going ahead and getting the closing set up. And then what's going to happen is key. The lender is going to send their appraiser out to appraise the property and make sure that your numbers were right where their thinking is as far as loan to value. That's going to determine how much money they're going to lend to you. Now, sometimes in that process, this can be a super smile moment, or it can be a super frowner moment. For the most part, the bank is still going to want to do the deal regardless of if your numbers came out a little short or higher than their numbers. But that may determine how much you're going to bring to the table. And let's talk about that for a quick second. Let's say that you assume that this property in this deal is worth $200,000, and the bank came in and said that the home is only worth $150,000. Now, I know I'm using a large gap here, and I don't want to scare you away from this, but what that means is, based on that loan to value percentage, whatever that difference is what you're going to have to bring to the closing table. Now, I've done deals where I've had to bring $15,000 more to the closing table, and then we've ended up selling for way more than what it appraised for in the first place. So I just had to bring a little bit more capital up front. And then I've done deals where their numbers came in higher, and I didn't have to bring little to nothing to the closing table outside of closing costs, my points, and origination fees, etc. So just again, circling back, trying to keep this in order. Once you get approved for that loan and closing has happened, the project begins. And this is when that draw process that we talked about starts. Awesome. So hopefully now that has kind of explained the hard money lending process. Just to kind of wrap up really quick, are hard money loans good for first-time investors? I'm going to say absolutely. Take advantage. Listen, you can leverage yourself. You can leverage your money, especially as a first-time investor. I don't recommend you go get 5 deals all at once, but you always want to be ready when the right deal comes around. Get you a hard money lending partner. Get you some investing partners. Make sure you all understand what you're getting into before you jump in. Keep in touch, right? I want to know how your deals are going. I want you to follow me on my journey as we complete more deals. Mr. J. Howard, Concept Business Success. I'm so excited for your future. I hope you get some value out of the content that we're bringing to our YouTube page, to our website, of course, across all social media platforms. I'm going to go on hard money loans. Make sure that you're getting in a deal that makes it worth your time, worth your money. And absolutely, the goal is profit. So go get some profit. Let me know if you have any questions. Make sure you like, subscribe, and comment. I'll see you at the bank.